Okay, it is, let's say 9:27. We are recording. Minimize that. Hold on. Get to page 1. So you saw the initial reaction to the jobs report. You see all of this, that quick pop up here, right? And so the question's going to be here, are we going to be able to hold this? Of course, we'll see. 1 second. Let's get the page. Page 1. This is the 4th. Always verify that you're reading about the current date, right? Very, very rarely will they come out very, later than 9:05. But always check your date up here. All right. Lowest unemployment rate since 1969. Blah blah blah. Some context, and so we're interested in what is that context, of course. This, again, was probably suggesting here, they didn't know quite what to expect. I pointed out this morning in the email about the ADP report, Wednesday's ADP report, and that suggested that maybe we should see a weak number. Hold on. And so the bottom line here was still we got inline expectations. So once again here, the market has a couple of things to consider. It's nice to have jobs, but it's also nice to have increasing income. And so that average hourly earnings, that's going to weigh a little bit. This market, I mean, this initial reaction, the bullishness out of this market, I don't think is overwhelmingly, I don't know if it's going to hold. Let's see here, 1 second. Again, the market knows that things are slowing down, and as long as that's the case, it's going to, I would think anyway, they're going to keep talking about, we'll check with this in a minute here, 1 second. You see this? So is that going to help the QQQ? Yes, it will. You do want to follow, as always, the FANG stocks anyway. Facebook, Apple, Amazon, Google. Hold on here. So Fed rate expectations here. We're going to come in on this as the day goes by. So we'll click here on probabilities over on the left. We'll see if these numbers change. I know this changes during the day, what we're seeing here. I know this changes. What I don't know is if when I click on probabilities here, does this in fact change? So we'll come back to that. So the more that if this were to start increasing again as the day goes by, that would be the market is telling us they do expect the Fed to come in and lower rates. I did not get the impression from listening to Bloomberg this morning that Wall Street was overly excited about the prospects of the Fed coming in. So in other words, there's still a lot of uncertainty out here now. That may sound like bad news, but it's also, as I pointed out in the email this morning, the market makes a living out of climbing that wall of worry. All right. So my contention would be as we head into the earnings season going towards the end of last week, of next week rather. um, Earnings are going to, once earnings start coming out, nothing else matters, all right, for the next week or so. So the data points will keep coming in, but in the end, nothing's going to matter except those earnings. So we can be optimistic. Look, one way to look at this is that as of yesterday, the bears had their chance on pulling this market considerably lower, right? And every reason to do so, but they didn't. They couldn't get the job done. So that's something to consider here. This is still the ES futures. Here's what we look like for a year. Many charts look like this, something like this anyway. Highest low. Let's see if we can get some behavior here. I'll use a SPY here for 1 second. SPY. We got a pop on the SPY. If I'm looking just at the, if we do pull back, you could see it right here. We can pull back to yesterday's close. If we did pull back to yesterday's close, this market would still be in reasonable shape anyway. The bad news here, as I keep pointing out, look, we gap down, right? So we gap down. Price tends to move in the direction of the gap, right? The burden of proof here for this market to push any higher, without question here, is on the bulls, right? The bulls, we were oversold. Now we're not, right? So the burden of proof here, the bulls have got to come in and get a positive close today, hopefully higher than the last 2 days. 1 second. I mentioned this morning the ITB and the XHB as home. ITB. This is the one I mentioned, I guess, earlier in the week, maybe as early as Monday or Tuesday, but pointing out the why were the home builders not following the market down, right? And so here's one. You can see it here. What the beauty of this? Look at this. Now, this may or may not be occurring, but when I see this behavior of price action, right, where clearly here we have an uptrend, and clearly every time, which has only been 3 times, 2 times, yeah, 3 times, price action comes down to the 20 SMA. And so here's your 20 SMA. That suggests big money is stepping in and buying on the 20-day moving average. In other words, some big money managers are giving their underlings marching instructions. In other words, every time these stocks drop to the 20 SMA, right, buy the stock. Right? And this, what you're seeing here, is sort of indicative of that type of behavior. Right? If you see this on any chart where the price action, every time it comes down to the 20-day or the 30-day or even the 50-day moving average, and it gets automatically bought and pushed back up, right? Every time that happens, right, then they're telling you, that's institutional buying. Right? Institutional buying. That's one signal or one way to measure institutional buying. Not the only way, but one way. All right, so that's the ITB. And then the other one I said was the XHB. Again, all of these are home builders. Now the XHB, you'd have to look up the difference. What is the difference here between the XHB, the stocks inside? Because here you see this one did break down. And it's not as, the XHB certainly is not as clean looking as the ITB. Is that worth investigating? Well, it could be. One way to do that, if you were so inclined. You can come in here and so we'll duplicate this. So for this one, I'll say what's in the XHB there. And on this one, the ITB, what's in there? And again, we should be able to appreciate the difference here. So here we have builders. You see big name builders and others. So look, 13%, Lennar, another 13%, versus the XHB has some of the same stocks. Remember, they're not going to be identical. And we know they're not identical because they don't behave the same way, price action. These are builders and or have a lot to do with the building industry. You could see that. These seem to be more, they have more retailers that have to do with, that's what it appears to me. This one here has more retailers associated with it, at least on the surface. So again, in this case, you need to pick carefully what either the stock that you're interested in. Let's see. One second. Trying to find, let's use Lennar, I guess. Yeah, Lennar. Okay, so look. Lennar's a builder. Great looking chart. Broke out of that channel. Another point I guess I'm trying to make here is, look, you don't have to play the high tech stuff, day in, day out. I mean, if you can find an industry that has momentum behind it, right, you can play in there. No, you're going to follow the same guidelines as your regular trades. Hold on one second. Hold on. And for today, there's nothing left. There's no 10 o'clock announcement. Is there? 4 o'clock, 8:30, 8:30, 8:30. Yeah, everything's out. Let's see if our numbers have changed here. See, we have a meeting coming up on October 30th. All right. So the question here they're suggesting there's a 78% probability, right, that they're going to get a cut. And to my way of thinking, this goes a big way here, a long way towards supporting the price action. One second. This is important, certainly important to Apple. That's why Apple is popping today. See, look, this is why I keep pushing using zero hedge here. You see the, so this is 8:43 a.m., right? So it's 15 minutes after the jobs report, right? And so you click on, and again, that's the only reason that I use a zero hedge here. It's I want to see the commentary because they're very good at it, right? I want to see the commentary after something has just happened, some event, some news, market news, right? And they're very good at laying it out. Another reason that you might want to get in the habit of doing this, all right? You're going to see the same reaction over and over and over, and you're going to see the same reaction not just on zero hedge, but you're going to see the same reaction in your charts over and over and over again. So again, one big thing about this trading business, it isn't rocket science, all right, and it can get pretty boring because you're basically watching the same thing over and over and over, right? And what you're watching basically does not change per se. I mean, what you're watching changes, but I mean, the things that you watch are pretty much as you see them, as I have them outlined here. What works for short-term trading is we're looking for aberrations. Right? That's why it's important when I can note, if I can note that the bond market, let's say that they're buying bonds, they're pushing bonds up, they're buying bonds. Well, instinctively, I know that if that's the case, they should be selling stock. But if I see that they're buying bonds and they're buying stock, that's an imbalance, right? And that tells me to look for something else to give me an edge as to which way I should go, okay? So in other words, so in this case, or not this case, but if it were happening that they were buying bonds plus they were buying stock, again, I know that's not going to last for long. It could last for a few minutes. It could last for maybe even an hour, a couple of hours or so. At least in a fast-moving market. But all of a sudden, if I'm noticing also, though, that the VIX, let's say in that same period of time, right, that the VIX might start climbing. So I've got stocks moving up, I've got bonds moving up, but I note here, the observation is all of a sudden I see that the VIX is also going up, right? If I'm an aggressive trader, I'm going to turn around, and at least the way I would play it, I would probably take the market short. I would probably buy some puts on the SPY because I'm anticipating that, again, this can't stay this way forever. They're not going to buy bonds and stocks simultaneously for, every day for the next, for the remainder of the year. That's not going to happen. That's another reason that you want to build your comparison charts. Sure that you understand those relationships between the rising dollar and the falling dollar, rising stock prices, lowering stock prices, rising interest rates, falling interest rates, right? Those comparisons any which way you want, but just, again, make sure that you've got some way, these comparisons to the dollar. Because a rising or falling dollar tells us a lot. So here, I can look back. The blue line here, right, is the dollar. The black line is whatever else I have up here. So the black line here in this one is the bond market, 10-year bond. This is the black line here is the S&P 500. This is the bond market. This is the government bonds compared to the dollar. All of these are compared to the dollar. And so what I'm looking for is over time, does the bond market go up or down with a rising or falling dollar? Right? If it does it over the big time, right, it also does it over a longer period of time. It also tends to do it over a short period of time. So these sensitivities are what we're trying to watch. It does take time to sort of learn that, but is it worth knowing? You bet. 1 second. Hold on. Yes. Okay. All right. Back to what we think we see here. Hold on. SPY action, not very convincing here. I mean, I see that it's higher than yesterday. Again, it's got the close there to be of some value. Let's look at that SPY again in a little bit more detail. 1 second. Clean this up. You could see here our resistance. See the red line here? All right, that's our point of control. If you're bullish here, you want to get a closing price action above here, above that red line, which is, what is that, 291.80, I'm sorry, roughly 292. We're sitting right now at 291.84, so we're just pennies from it. This is very typical bounce here after having such a sharp selling in the previous few days here. 1 second. Okay. I need to look under the hood here. Let's look under that hood. 1 second. So all of these charts on this grid are 5-minute charts. Let's use the SPY. When do I start worrying on the 5-minute chart? Well, look, every day the same thing, right? This is partly what I mean by trading can be boring here, because again, what am I watching here? Here's my morning high. Here's my morning low. That's what we're waiting for. Got to break above or below that. 1 second. I'm going to go to my short-term chart, and that's where my 15-minute chart is the longer term. Again, I want the SPY. If you'll recall, yesterday I was explaining, how we would trade it. What's our trend for the last 2 days here? Our trend for the last 2 days is up. Right? If I'm a short-term trader, right, maybe I want to trade this trend. Whoops, Jesus. Maybe this is the trend I want to trade. Okay. On the other hand, let's go back a few days more. Where was that? Let's see, 10 days here, 10 days. So on this chart, 30-minute candles, these are 30-minute candles. As you can see here yesterday, as of yesterday's action, right, I did break this little downtrend. And for the moment anyway, I'm above where we broke down from, when we gapped down. So here's what you're looking to do here on the SPY anyway. And for what I'm going to show you here, it has nothing to do with whether you're looking at 30-minute, 15-minute, or 5-minute charts. But at this point, right, the challenge for the market is to close this gap. Right? We want to get price action up here. And the reason we want to get price action up here is because once it does that, right, then it puts this target in play. But until it does that, right, this is probably the I don't want to say that's probably not probably where it's going to go, but this low, right, is probably a target as well. In other words, we're sort of caught between a rock and a hard place. Again, closing, this is why closing gaps is important. If we do close this gap, right, that puts the previous high in play. If we went up here, if we closed back below this gap, by the end of the day, if we close below that, it puts this low in play. Right? Again, what is price behavior here? Up here, they were saying they're rejecting that price. Price is too high, too high. If we can't get it back above here at this point, right, they're going to be saying the same thing. Price is too high. Boom, they'll push it back down. Just keep thinking in terms of price rejection. They're either rejecting that price as too high or rejecting it as too low. One or the other. Right? Meanwhile, look at the behavior here. This is, by the way, at this point, if you're bullish, you like this behavior. See this up here? We're caught in a very tight range. What is that, 292? This is a 50-cent range here. And it's been that way basically since the open. This suggests more upside. At least this behavior suggests more upside. Forget the price, the behavior. 1 second. What else might help us here? What are they doing with the options on the SPY? options on SPY. So let's see, again, we're sitting at 291, scroll down, pretty bullish. See it here, PC ratio? I mean, I say pretty bullish. It's bearish because it's above 1, right? So, but you've seen those numbers. I think we were monitoring it the other day when it went from 1.6 to 1.3 to 1.1. Right? So here we are at 1.2. It's mildly bullish, and you can see the difference here between calls and puts. That's one measure. Another measure we can have here. Look at the VIX. The reason you're seeing the SPY go sideways the way it is right now. One second. Here you go. Look, it's doing it. It's breaking out now. But the reason you're seeing that, right, I mentioned it earlier. Look at the VIX. The VIX is pushing lower. The bond market is out. Is a non-event at this point. This minute-to-minute action here, and this short-term action here in the bond market, right, is not worrisome. One second. They are buying high-yield bonds. That means they're willing to take risk. That's why we watch this, high-yield bonds. We watch the high yield. Right? This is junk bonds. We watch the banks. At this point, this market is telling you it wants to go higher. If you're not in a trade at this point, I mentioned previously, you may want to wait until 10:30. Again, you never ever want to be so frazzled. And believe me, I've been there. We've all been there. All traders have been there. Right? You're so frazzled because the market is moving fast. Okay, and well, you've convinced yourself if you don't get into this trade, you're going to miss out. Whatever you do, do not take trades if you find yourself thinking like that, where again, you've got to take this trade, or you've got to do this, or you've got to do that, right? Let the price action come to you. Don't chase price. Now, are there exceptions? Yeah, there are. But for the most part, 95% of your trading will involve don't chase price. All right, so we are seeing SPY pushing higher. That's a good thing. One second. Speaking, it's 10 o'clock, so let's see how healthcare. Is there some reason to feel comfortable in this action? Well, let's see if I hope I'm not mistaken here, but when I last looked at this page, I do believe that this number, even though that's a January 29th, right, but this number, I believe, was at 41, that particular date. Wouldn't swear to that, but that's what I thought I remembered. Top probabilities, October 30th. Well, they're still waiting. Here you go, 78. You said that's the number you want to what? Meeting probability. Okay, that's a meeting probability. This is the total. Let me see. So 78.57. Refresh that. 78.57. 78. Again, I don't know how often this particular number refreshes. Just keep the 78.57. That's what I'm going to remember here. 78.57 at 10 a.m. Made a note. All right. So the unemployment rate hitting a 50-year low is one thing. I think that the bad part about this report, as it pointed out, was the hourly income was not going higher. Okay? So you can't, if hourly income is slowing down and earnings are slowing down. I don't know if you caught it this morning, but they were talking about the retailers. All right, all the retail stores, they took the biggest loss in employment over the last 8 months. And why are they losing? I guess they're losing to Amazon. No, that would explain that. One second. Look at that, look at that. And let's see again, do we have very specific news here? One second. Look, getting more bullish here. See your PC ratio? Your trend barely getting bullish, but it's there. I mean, it's coming back down to 1 or below is bullish. Your VIX is still pushing lower. So typically here, I might expect some sort of a pullback along the way here today. How significant is it? Well, it remains to be seen. But at this point, they're pushing to close that gap. You can almost see that. We are going to get here, 293.20. We will get here. My bold prediction. Can I guarantee it? No. One second. Let's use a 5-minute chart here. Look at the strength of the trend. Remember the DMI here. The strength of the trend. That black line is pushing up. Right? That is telling you this strength, this trend is getting stronger, at least as it appears on a 5-minute chart. Relative strength, on the other hand, look at the RSI here. That's a 6-unit RSI. Okay? It's a little high. So it's not going to surprise me that I might get a little pullback right about in here, right? Let's see what this looks like on 2 minutes here. Hold on. Or just for today, 2-minute charts. Can't read that clearly. right, so back to, remember, we're looking at 133 ticks. This is that period I said this behavior I said was going to push higher. Here's the push higher. Now, here's the deal. Price action, you can see it here. Maybe it's peaked, maybe it hasn't, but price action coming back down. What happens when it comes back to where it broke out from? If you want to have a good day in the market here today, you're going to let this price is going to come back down here to 292.20, right? It's going to bounce off and run back up. It can come down here to 291, but and even if it does, it's got to push back up. At that point, you would want it to be pushing back up. 1 second here, I'm going to change one thing. Remove the Bollinger Bands. And in this case, what I want here is VWAP. 1 second. All right, so this dotted line is volume weighted average price. And look, I pointed out a moment ago on the 5-minute chart, the RSI was a whopping 82, right? Well, you'll notice here, let's see what that looks like. Let me get back to that, I think, 5-minute chart. Let's see what that looks like now. Today, 1 second, 5 minutes. So on the 5-minute chart, see how that, you had warning on the 5-minute chart with a reading of 82, all right, it was pretty high. It wasn't a guarantee it's going to roll, because it can go higher. It can go 85 to 90 to 92, 93. But when they get to those ridiculously high numbers, you know to expect a downturn in the next few minutes. In this case, here's our downturn. So again, at this point, if I'm watching this kind of action, the 133 ticks, if I'm watching this, right? So it's a matter of perspective and time. What time view are you watching? More importantly, what time view are you trading? Are you trading a bearish pattern or a bullish pattern that you saw on the 5-minute charts because it confirms a longer pattern? Remember, I went through this yesterday, right? You want to trade with the primary trend on your lower time charts. When you lift up the hood and look under your primary trend chart, you're looking at the behavior, and that behavior should give you either a bearish or bullish component, bearish or bullish setup, a bearish or bullish a chart pattern. Okay? And if that chart pattern confirms the longer term trend, that's the one you want to trade. Anything else that you think about doing, right? You're basically saying to yourself, well, I'm pretty sure I know what's going to happen. Right? We let the charts, this is what I mean. The way I'm talking and describing this is what I mean by you let the chart tell us what to do, okay? You and I could sit here all day and give arguments as to why we think the market should go up or down, right? But I also can guarantee you that neither you or I know with certainty what the market will do for the next minute, let alone by the end of the day, let alone by the end of the week, right? If you get yourself to that point where you're thinking you're becoming fallible because you've made a good couple of market calls, right? I can assure you the market will come along, right, and humble you at some point. It's just the way it is. Meanwhile, hold on. Who's watching what today? Is anybody trading there? You're not in Disney anymore, right? Good thing. Hold on. Look at AMD now. Let's look at the semiconductors here. Are the semiconductors doing anything? And again, I point out to you, look, the more you know about not just the stock that you're interested, the company that you're interested, but the industry that it's in, right? In relationship to the broader economy, right? You can do well just trading that. I mean, you don't have to take wild swings at everything that comes along as a trade. But let's just look here for a second at the semiconductors. Hold on, semiconductors. SMH. Kim, what was the other one you were in? Not the Disney one, but what was the other one the other day? Was that Disney? Or was that SPY? QQQ. Okay. We might, hold on. We'll get back to QQQ in a minute. So here's the semis. As I look at the behavior of the semis, still on the downtrend. We gap up. We want to be able to say that we trade in the direction of the gap. Look, or rather that price moves in the direction of the gap. But look, keep this in mind as you're looking at this chart. Okay, where we are right now. Okay, see this low on this day at opening price. Okay. If you want the semiconductors to continue to push higher, right? They cannot go back below today's low. See today's low? Today's low is equal to that last time we saw at this price. If you're bullish on the semiconductors, this price has to hold. Now, who's leading the way here? Where's my CLAC? Look at CLAC here. Is CLAC starting to plateau here? Look at this. We're having a good day in the broad market, but CLAC is not participating. Remember, CLAC has gone quite the opposite way of the semiconductor. So maybe this thing is maybe they're starting to say, well, CLAC has plateaued. I don't know. But this behavior tells me to at least watch this thing. I don't know when their earnings are, but make a note of that. CLAC, I'm making a note here so we can look at it at least next week, see what's going on with it. CLAC, CLAC, CLAC. Meanwhile, all these other semiconductors, no big shakes. We know that Apple had a good move here this morning. So here's XLK. Same thing here, XLK. Just because we're seeing this action in Apple, do you see anybody here whose price action is above or rising? Yeah, here's one, NVIDIA. So I was going to say, do you see anybody here whose price action is above or rising moving averages? NVIDIA is one. Taiwan, TXN, Taiwan Semiconductors, another. Everybody else is underneath falling moving averages. That's not what if you're bullish, that's not what you want to see. If you're bearish, it is what you want to see. Look at PayPal. as usual, again, there must be, I don't know, 872 million different ways to trade this market. You can enter your trade based on whatever you think is a viable trigger. For some people, it's when the moving averages cross over. For others, it's rising or falling volume. I mean, what I try to get you guys to appreciate is that even though there's no one way to do this, and even though there's never any, you don't have, everybody doesn't have to play Apple. Right? Apple is not the only stock in the world out here. But if you're playing options in your stocks, right, you do have to pay a little bit more attention. Right? Hold on. So let's look at QQQ for a minute. Hold on. QQQ. Today's action in QQQ. Again, we are not out of the woods here. We are above our point of control price. That's important. If we do roll over as the day goes by here, if we do roll over and go below today's, our morning low, right, then we've got, our new target would be not 188. Our new target would be 186. You see here we are at the 50% mark, 50% mark of all, here's 100% of the move. We've recovered 50%. If we can get a close above that 50%, that's so much the better. But again, that's why it's not how we open that's important. Why is the close, today's close, so important? If we close up, right, it confirms that this buying, this rally yesterday, right, was not a fluke. Right? If we close down today, right, we opened higher, but if we don't hold and we come back down, what are we doing? We're rejecting that price. In short, we would conclude that what we're confirming is not the uptrend. We would be confirming the downtrend if we close down today. That is the stronger trend. It's the longer trend. Once again, I say this here, we're using the QQQ, and we're looking back, what, 2 weeks, 2.5 weeks of trading here, right? But, these could be minute candles, they could be 5-minute candles, whatever you want them to be. And again, you would look at them the same way and try to trade them the same way. So, one second, QQQ. The problem with, again, with trading options, if you're chasing price, right, you're already overpaying for that option, right, because volatility is picked up. Right? Especially if you're directional. Right? If you're a directional option trader, which means you're not hedged, right, you're simply betting the price is going up or the price is going down. Right? I mean, keep something in mind. It's the hardest trade to do, right? And it's the one that can make you a lot of money and it could take your money, period. I mean, you're not even hedging, with a spread anyway, a bull spread or a bear spread. You've got a modicum of control. Okay? The only control you have when you're as a directional option trader is you're controlling the price when you get in and when you get out. That's it. Hold on. And speaking of all that, relative to price and price action, if you saw the morning email about you can learn how to trade and have your best looking chart, and just because you picked that good looking chart, the very next minute, all of a sudden that trade falls apart. It's not necessarily. It may be something that you did incorrectly. Maybe you misread the charts totally, but it also may not have anything to do with your chart reading ability. Maybe it was a news item that came out, and of course that happens quite a bit, doesn't it? Where you get a news item hits the market jiggles for a few minutes, and then comes back to where it was. Right? Once again, the most important thing is your entry relative to the price you're paying for that option, and then your target. Your target is immaterial. I mean, it's nice to have a target. You can pick a target all you want, right? But it's not a target in this business is not a stationary thing. I mean, it's there. It's up. It's either above you or below you, right? But to get there, right, is a function of behavior. Behavior like this. I mean, this is what I meant by earlier when I was pointing out this behavior. That's what you want to get good at, being able to read, is that behavior. One second, this is. Remember all of this morning? Oh, and look. Am I telling you right or what? Look, so we bounced above VWAP. We stayed in that 50-cent range. I said we're going to move higher. We moved higher. I said we're going to come down to VWAP and we should bounce. We bounced. Right? So bulls are in control here. This is only the morning session. It's 10:25. This market could still find an excuse to pull back. If it does pull back, you're going to pay attention to your levels here. So maybe you do get a 10:30, quarter to 11 reversal down to 291. Right? You're certainly going to pay attention to these support levels here. 291.65. That's at 70 cents away. And again, this is all tradable. If you're a short-term trader, you can get in here and play whatever you want, however you want. Again, it's not about price, right? It's about behavior. That's what I'm trying to make sure you understand. And let's see what the big numbers are doing here. Hold on. Still looks favorable. In my mind, I don't think it's going to stay this way all day. I can tell you right now, for the SPY anyway, look, I said this morning, we are going to get, as far as I'm concerned, to 293.22, right? No, I can't guarantee that, but I do know that that is the target. As if in fact they do get up here, right? There's no reason for them to just go crashing higher. The bulls would consider the big success just to get in here and close this gap. What is the trend so far relative to doing that? Looks like they're going to keep trying. They're going to get here. Now, whether they get here by noontime or whatever, but if it does pull back, and as long as it doesn't pull back seriously below VWAP, again, that's tradable. Hold on. That's steady. Okay, now keep. So we're sitting right on VWAP. Why are we going sideways here? You see this action right here? These are 15. This is 2 days worth, 3 days worth of a 15-minute chart. Why are we going sideways as you look at this? You see this? That's why. Let's see how far back that goes. And we'll go back 10:30. Right here. Let's go back even further. About 10-day 30. Let's do 20 days, 1 hour. Let's see what that looks like. See right now, look, we've got the path up. There's not a whole lot. We've got room to run here. See this? I'm looking for, why did we stop here? And let's see again. Here's where we stopped. It makes sense that, again, we've got on the way up, here's price action on the way up. You've got diminishing price resistance. Here, all of a sudden, you get room to run. And sure enough, it's trying to run. But as it's coming up, it then starts hitting increasing price resistance. So I would expect if price action can push higher and literally does, let's say price action does go to close the gap, and again, that would represent a 50% retracement of the sell-off that started back on September 19th. So that would be a significant. Now again, at this point, that's exactly what I would expect here, barring some sort of mega positive headline. If price action did continue up here, this is where I would expect sideways consolidation, maybe some profit taking to come in right at that price level. Now, it seems to be pulling back a tad here. We know, is there a reason why? Doesn't seem to be a reason per se that I can see here anyway. Hold on. Nothing specific, just behavior, just traders being traders, if you will. So look, for the first time here, not the first time, but we did cross VWAP. And lo and behold, when did we start doing that? 10:29, 10:30. Okay. So when I say that there's something to that 10:30, it is. I mean, there is something to it. It's just not ever. It's never guaranteed that you're going to get a 10:30 reversal. Right. So the question becomes at 10:30 and the behavior therein. Right, does that in fact wipe out, all of the bullishness of the morning? Right? Well, in order to do that, you'd have to come all the way. You'd have to go back below these lows here. 1 second. So in order to wipe that out, you'd have to come back and break these lows. Can I guarantee that's not going to happen? Well, again, I don't know. Maybe there's very specific news out there. It doesn't seem to be. This just seems to be trader behavior right now. What else could I track here? We could put in some volume. I'm looking for major spikes here in volume one way or the other. Not really seeing it. See it here? I mean, I'm not seeing any mega. A mega spike in volume is something that is 2 or 3 times, or maybe even 4 times, the previous time in question volume. So I'm not seeing anything out of the ordinary here. We've turned mildly, again, this is mildly bullish, bearish at 1.3. This number at 10 o'clock was 78.57. Let me refresh that. Has gone up to 79.64. So this number that you see here on this page, this number is active. Okay? So as this is going up, right, this, in my opinion, is one of the things, not the only thing, but one of the things that is helping to support the upside to this market. If this were going down, right, and the market was going down, I'd be a lot more bearish. But at this point, I have every reason to think that this will reverse. Look at my VIX. My VIX is still well under that 21 that it was the other day. This is still bearish. Keep that in mind. A reading of 18 is still bearish. And one last look at SPY. Look. Remember this morning, this was all white, right? So now it is getting weaker, but do I believe that? Do I accept that do I trade it? In other words, do I trade this to the downside at this point? And the way I'm looking at things, especially since I just saw the the expectation of easing jumped up a bit, that again will be one thing telling me hang in there. Oh, look, this is interesting too. How many of you see or don't see, but is this a head and shoulder pattern here? There's the neckline. You can see, you know, if you come to the trading room every day for a while, right, you'll see the myriad of moving parts, right? I mean, they're almost endless, right? Things that affect the market, things that affect the market. Well, the thing that affects your trade, forget the market, but the thing that affects your trade, right, is the price action, bottom line. It's the only thing you really need to watch. The reason I throw in these other outside sources of things that you should know about is because you should know about them. I mean, the market pays attention to this stuff. Why shouldn't you? Right. So if for today, here, just for today, does this look like a head and shoulder as I'm looking at this on ticks? These are 133 ticks here. How about time, just 1 minute? Would that make a difference? I mean, you know, that could it could be useful. Let's see what are they doing here? My PC ratio is picking up. So maybe they're going to break down. I wouldn't bet on it. And even if it did break down, I think the news is out there and the expectation is out there, as far as I can see, that this is probably the most important thing having to do with the bullishness of the market. And so now that's my opinion, right? Remember, I'm one trader. I'm not, you know, I'm looking at all this stuff and then I'm going to make my call. You're looking at all that stuff and you're going to make your call, right? And maybe we'll agree, maybe we won't. But in the end, as I'm looking at this price action on the 1 minute, I don't like what I see in that it does look like a head and shoulder a bit. Let's see what that. We want to keep the price action. Let me really clean this up here for a second, show you what we need to do here. If you're bullish, you want this market to not go below this opening price, right? That opening price is, or rather, we don't want price action to go below $291.51. We're 20 cents away from $291.51. $291.51. One second. I could almost point to this as another mini head and shoulder here. I don't pay this. I don't get into this much minutia in my own personal trade as much as one reason that I do get into this deep minutia, it's a learning thing. And one, it also has something to do with why do I teach this stuff? Well, teaching this stuff simply makes me a better trader. That's the only reason I do it. And that's the bottom line. I mean, that's in order for me to show you that there's method to the madness. I have to be able to explain the madness and then try to ascertain a method. Right? That's what you're trying to do as well. All right. One second. All right. So once again, at this point here, these are 30-minute candles. Look, you know, we can get a hard break that takes the SPY down to the opening price action. Okay, if we go down to the opening price action, I think I'd rather be a buyer at that level. If that were to happen. We'll have to come back and see how that's going to play out. Again, I'm thinking that towards the end of the day, that they will try to push higher. Now, I will also admit, though, I mean, look, it's only 10:45. We simply have got to stay above the opening price action for today. That opening price action is pretty important as a level. If we go below that, we're going to close yesterday. We're going to close this gap. If we do go below a morning open price, right, we're going to come down here and close this. So the news this morning was good, but it wasn't, as you could see, not euphoric. If it were euphoric type news, we'd be pushing higher. There's enough headwinds out there to make everybody concerned. That's why, again, sometimes it just makes sense to do a lot of short-term trading rather than, and then other times it makes sense to take the longer picture. Again, any number of ways to trade. There's no one way to do this. I'm going to hang in there with my my morning thoughts so far. And it's not how we open that's important. It is how we close. Pretty important here today. We've got a reasonable piece of news this morning. Wasn't perfect. If you want to know how imperfect it was, just keep testing this number here. That hasn't changed. All right. Gotta go at that. Be careful out there. Remember, it's the weekend. Lots of nasty stuff can happen over the weekend. Generally speaking, I don't hold over the weekend. And look here, they're trying to push lower here. So this is important here. We have gone below our morning lows, not our morning low, but our early morning lows. And typically, this is what you're seeing here, pretty typical here. They know that many traders will come in, and because you're breaking support levels, right, everybody jumps in literally at that point, right? So you jump in and whatever, a minute later, 30 seconds later, all of a sudden it turns around and it rips high. When you are at support levels or resistance levels, very important, you need to be able to appreciate what's going on. We'll talk about this one on Monday, but you need to be able to appreciate what's going on with the action above current price and what's going on with the action below current price, right? Hold on. Yeah, we'll make a note to cover that on Monday, but that's where options come in and you start studying your options action. That's a lot of plays where I got sucked in, and this is how you learn some of these things. But at the end of the day, the market all of a sudden starts going down, and after having been up all day, and then all of a sudden it looks like it's going to break. So you jump in because you're convinced yourself it's going to break, and 2 minutes later it turns right back up. We'll monitor that, and I'll show you again how to monitor that on Monday, and we'll take it from there. Some of which I've already alluded to today about what you're looking for, but there are more details. In the end, look at the action here on 15 minutes. The way this is building right now on the 15-minute chart, right, that's a bull flag pattern. That's a bull flag pattern. How do I know? Well, because that's what bull flags do. You get a nice movement up. Right? So all of this distance becomes the flag pole. This little pullback is the flag or the pennant. It's a bullish pennant. And not only is it a bullish pennant, geez, once again, this support level comes into play quite a bit. So now as I dig in a little bit, that looks like on a 5-minute chart. Here you go. Look at this. I mean, am I good or what? So if you're bullish now, you got to wait until this thing comes back up and breaks that downtrend line. But anyway, you get the picture, and that's the behavior. There's no easy way to do this. And by the way, nobody ever said that this was, in fact, easy. Okay, it isn't. All right, kids. Look, get me some new students out here. I need some new students in here too. I will talk to you guys Monday. Have a good weekend.